Every time you put the stock market denominated in Bitcoin on social media, people hate it. They say this is a misleading chart, but really it's just a math equation. BlackRock is a Bitcoin company. They'll obviously never say that, but because their most successful product is IBIT, I think that speaks to how Bitcoin is really eating everything on Wall Street. I don't even know if they're allowed to talk about Bitcoin necessarily, like these central bankers. My guess is in the next few years, they're gonna start allocating Bitcoin, or they're gonna share that they've been allocating to Bitcoin already. Two things can be true at once. Asset prices are booming, but at the same time, it doesn't necessarily mean things are better for the everyday American. I do think the affordability issues today are nothing like we've seen before. The demand for the infrastructure and the products of AI is going to be extraordinary. And we've never been in a bubble where we hear the companies that are driving the bubble say that they cannot keep up with demand. So I think all of that combined, it's very hard to bet against.
Hello, everyone, and welcome back to the Bitcoin News channel. I'm your host, Rob Wallace, and today I'm very grateful to be joined by Phil Rosen, former senior reporter at Business Insider, co-founder of the Opening Bell newsletter, and host of the podcast Full Signal. Phil, how are you doing today?
I'm doing great. Thank you so much, Rob, for having me.
Yes, absolutely. Welcome on. So I've been following your work for a little over a year now. And one reason that you've popped up so much on my timeline are your charts. And one of the best charts that I saw you put out in the last couple of months is you were denominating the stock market in Bitcoin, showing that actually the S&P 500 has dropped 85% since 2020 when priced in Bitcoin. So let's dive right into that, but tell people your background, where you came from, and what you're doing now.
Yeah, let me start with that chart. That chart is extremely divisive. Every time you put the stock market denominated in Bitcoin on social media, people hate it. A lot of people love it. Bitcoiners love it. But people that aren't into Bitcoin or don't buy Bitcoin, they say, look, you're lying with the data. This is a misleading chart. This isn't the full story. And, maybe there's bits and truths here and there, but really, it's just a math equation. And the chart is what the chart is. And it just shows essentially going down into the right for, from the top in 2020 all the way down. And that's even as the S&P 500 continues to break record highs. So I think it's sort of a narrative violation for the stock market bulls, because they say, look, we've done so well in the stock market, but it's been in a currency that's been getting debased for decades. So there's quite a good story in that one chart, which is why I like to repurpose it every now and then. But so to step back, I write this newsletter every day, covers financial markets, always a ton of charts in the newsletter. I interview a lot of people to figure out what to write that day, get their quotes, because I am a reporter, I'm a founder, but also a reporter and a journalist. And as you said, I host my own show. I interview people. I talk about markets, talk about finance, talk about Bitcoin, how AI is changing the economy, the labor market, the macro picture. So I try my best to keep my finger on the pulse of how investors are thinking. It is really what I try to do. And, it's apparently gotten your attention. So that's why we're chatting today, and excited to get into it.
Absolutely. So in terms of your experience as a reporter and talking about finance, how long back does that go? And have you always been hovering around Wall Street?
Yeah, I've probably been a reporter now for 6 years or so. Maybe a little more than six, 7. I feel like I'm getting older by the second here. I started I was actually writing profiles of doctors in the medical field in my first sort of editorial job, and I was based in Hong Kong, so I was writing these in Hong Kong in English. And then when I moved to New York, I started at Business Insider. That was during the pandemic, and I was put right on the financial markets desk, even though I had no finance background. And I remember talking to my editor, I was like, look, I don't know anything about anything. Are you sure this is where you want me covering what seemed at the time like the most technical topic in the newsroom? And my editor was like, don't worry, you'll be fine. Just ask a lot of questions. And that's pretty much what happened. And I've been covering Wall Street and investing in markets since then. So that's the expertise sort of that I've sort of fallen into. But luckily, I love it. So there's really nothing better, nothing I'd rather be doing.
Yeah, it's a lot of fun. It changes every single day, and there's a lot of brilliant people to talk to in this space. So one of the biggest narratives over the last 2 years, of course, on Wall Street has been the launch of the Bitcoin ETFs, the most successful ETF launch in all of history. IBIT hit $100 billion in total flows recently and has dropped a little bit since then, but it was the fastest ETF to ever hit that milestone, right? I believe 4 times faster than the Vanguard S&P 500 ETF. So you are talking to people on Wall Street on a regular basis. What is the vibe check on Bitcoin? Do they believe in it? Is it just a little toy? What's going on here?
It depends who you ask. There are still so many people that think it's a fad. And, frankly, I think those are mostly the older folks, some of the older investors who, they've been managing money or running funds for decades. So Bitcoin, relative to their career, has just been a blip on the radar. It's not very new, or it's not very long-standing. It's still a very new product. And they're like, this will pass once the young people, get their hands in other parts of the market. I don't think that's true. Most of the younger investors I know, even at the institutional firms like JP Morgan or Goldman Sachs, if they're under like 38 maybe or like 35, most of them have Bitcoin exposure in some capacity or wish they had Bitcoin exposure in some capacity. But in many of these big banks, they're actually not allowed to advise their clients to gain that exposure. So I think that's going to change in probably this year, honestly. Like, I think this is probably the year that the last holdouts against advising clients to buy Bitcoin, I think everyone's going to be on board at the end of this year, if I had to guess. And it's funny because my friend and partner here, Anthony Pompliano, he always says BlackRock is a Bitcoin company, even though they'll obviously never say that, but because their most successful product is a Bitcoin product with IBIT, I think that speaks to how Bitcoin is really eating everything on Wall Street. The returns of the last 10 years, nothing comes close. And Wall Street recognized that a couple of years ago, so they started launching products built around tracking the price of Bitcoin. And that momentum is going to accelerate. Even though we had a negative year, I think Bitcoin was down 6-7% in 2025. When you put it in the context that it's coming off of back-to-back 100% years, there's really no other asset that you can say that about. Because if we saw the S&P 500 negative 7% in a year, people would be losing their minds. And because the years before that probably gains about 10 to 15%, so that's actually a massive decline. But when you put it in the context of a 3-year time horizon, Bitcoin's done extremely well. I think this year is going to be very good for Bitcoin, just because almost the psychological effect. We had our 3rd negative year in the last decade in Bitcoin. So what are the odds that we repeat that in 2026? I wouldn't bet on that. I think that Bitcoin has a lot of tailwinds behind it. All the tailwinds from 2025 that were supposed to make 2025 like the defining year of the asset, that didn't really pan out. But I think they're still in place. All those tailwinds, they haven't gone anywhere. The ETF momentum, the pro-Bitcoin White House, the Wall Street adoption and embracing of the asset, all this is still here. So to me, this is going to be a great year. I certainly wouldn't bet against Bitcoin or be shorting any of these products. So I'm pretty optimistic.
Yeah, I mean, Bitcoin has proven that it does need to take these periodic breaks. Usually it is the 4th year of the 4-year cycle that we see these large drawdowns, 75 to 80%. But in this cycle, in the 3rd year, we saw a 6% drawdown. So what I've been saying is that if this was our bear year, we are so lucky. Like we just spent the last 365
Yeah.
days creating this massive base that it's ready to just explode off of. That would be really something else. And it does make sense that 2026 would be that year because it takes time for this institutional involvement to really get moving, right? We saw the announcements come out in 25, but they're really taking effect this year. So just this week, now advisors at Bank of America are allowed to tell their clients, hey, you should put 1 to 4% of your portfolio into Bitcoin, right? Vanguard, who had held off for 2 years and seen their biggest competitors run away with this Bitcoin ETF, they have finally acquiesced and now are going to start offering the Bitcoin ETF to their clients. And now we're seeing Morgan Stanley just came out this week and said they're going to issue their own Bitcoin ETF, right? They got sick of selling IBIT to all their customers. They wanted a piece of that pie. And so now even Morgan Stanley's here. So it seems as if everybody in Wall Street is really just getting in line and wants to play. They want to be a part of this party.
That momentum, it's unbelievable, and I actually missed the some of that news you just rattled off. I didn't hear that about Bank of America, Morgan Stanley. So that's maybe my my prediction 5 minutes ago. Maybe it's already come true in this first week here. I don't know. That's yeah. There's going to be a lot to pay attention to coming out of these big banks because I think what the big banks are going to observe and they're going to get sort of FOMO about. You have a lot of these other smaller firms that maybe have less red tape to navigate. They've been launching products for several years now about, you have Bitcoin products, but you also have like Solana and ETH and like Doge products. So you have all these other sort of very volatile, potentially asymmetric bets that are already being packaged into sort of layman's products that anyone can access without buying into, let's say, a Coinbase app or something. Like you can just buy these products with your brokerage accounts. These big banks know that, and they're going to do everything they can, I think, to capitalize on that momentum, especially under the Trump administration, because the Trump administration is really pulling back on some of these regulatory challenges, I would say. And pros and cons to that. I think they're pushing the pace on cutting the red tape, which is good in one sense that you could see more innovation, but then I think it also opens the door to more risks of a bubble, let's say, because you have everyone flooding in and everyone's super excited to invent and test and experiment with new products. So there's a risk there, but the big banks know that this is their green light to make something happen.
And in terms of your personal journey with Bitcoin, you write fondly of it. So are you a Bitcoiner yourself?
I've owned Bitcoin. I still currently buy Bitcoin. I'm gonna try to do my best to, every month, every quarter, every year, try to own a little bit more Bitcoin as we go. And I think there's a lot of controversy, I think, around almost like the philosophy of Bitcoin. It's like very libertarian coded, I would say, and a lot of people when they see that, they're like, that means it's not an asset for me. And like, fair enough. I have no idea. I wouldn't say that about an asset. I would look at the performance. And I think if the performance is there, then it deserves a spot in your portfolio. But a lot of people, I think, look at it from the wrong lens, either politically or philosophically. And if they disagree with it, or if they're less individualistic of a bent than others, then maybe they won't buy this token. But I think the asset speaks for itself in performance. And if you isolate just the percent gains per year over the last decade, you can't compete with it. So I think it belongs in everyone's portfolio, even if just like a few percent. Like if you go with the most conservative estimates from the big banks, it's like 1 to 2% or something like that. I think that's too little, but even at that allocation, it can still be very good for your portfolio.
And did you dismiss it the first time you heard it? How long? What orange pilled you?
Yeah, I don't know if I was really orange pilled necessarily because I don't think I was ever that skeptical of it. I think I probably looked at the returns and I said, wow, this is kind of crazy. And I didn't buy right away. I probably started buying after I graduated college. And so this was maybe right before the pandemic. So I wasn't super early on it, but I was in enough where it's appreciated a lot over the last few years. So it's definitely been the best performing asset I own. I'm mostly, frankly, what I write about is mostly stock market and equity markets, but none of the stocks that I've covered or I've bought have done as well as Bitcoin on a long enough time horizon. So yeah, even for me, it's like, yes, I own Bitcoin. I actively buy Bitcoin. I don't know if I would go as far as to call myself a Bitcoiner. And maybe, it's just a semantics thing at this point. But really, what I write and talk about most is stocks. And yet, none of the things that I'm covering have performed as well as Bitcoin.
Well, you were able to get on to Bitcoin before the debasement trade was the term of the third decade of the 21st century, right? So COVID, we saw them print $6 trillion in 18 months, and since then, Bitcoin has run, of course. And now this year, gold has really stole the show. So talk about that, the debasement trade. Is Wall Street scared of the dollar losing its purchasing power?
I think whether or not they're scared is another question. I think everyone knows, though. Everyone knows exactly what's happening. And you see this because you also have central banks around the world have been ramping up their gold purchases for several years now. And I don't even know if they're allowed to say this or talk about Bitcoin necessarily, like these central bankers. My guess is in the next few years, they're going to start allocating Bitcoin, or they're going to share that they've been allocating to Bitcoin already, because they're looking at the dollar as the world reserve currency, and they're saying, look, if we hold a ton of this US dollar, it's going to get weaker and weaker, which means our holdings are going to get less and less valuable. So they, like everyday investors and Wall Street investors, are looking for ways to protect their purchasing power. Inflation isn't going away. We know that. The US dollar has been in a sort of a structural bear market for, I don't know, 30, 40 years now. Like it's been going down. You could bet on the dollar weakening over decades almost better than, or more reliably than anything else in markets. So this debasement trade, it's I think it was Morgan Stanley that came out and named it the debasement trade maybe 1 or 2 years ago. And since they did that, it started getting coverage everywhere. Reporters started picking it up, media started picking it up. But it's been, I don't know if anything's really changed since between the time they named it versus before that, because the smart money and the institutional money, they've already been positioning as if the debasement trade's been happening for a long time, which I think is probably the correct play, honestly. I'm not anticipating a collapse in the dollar or the collapse in the U.S. economy, but it's very hard to imagine a period of time where the dollar does not meaningfully weaken over 1 to 5 year. Like if you take 1 to 5 year chunks, it always happens. So then you have to ask yourself a question as an investor: where do I want to park my capital so that I can sort of protect myself from that inevitable trend? I do think the stock market is a great place to do that. I think stocks have handily outperformed inflation and debasement over the last few decades. But Bitcoin and gold, I think, have done even better. And what's interesting about gold is that I'm pretty sure 2025 was its best year ever, just like in history, at least in, let's say, modern financial history. And that arguably took some of the momentum or appreciation away from Bitcoin, because all these flows were going into gold, and gold ETFs were also incredibly popular. So all the money that was going there was potentially not going into Bitcoin or IBIT or these other Bitcoin ETFs. So I don't know if it's not fair to say that Bitcoin didn't work as a debasement trade last year. I think it still did, frankly, but just because it was negative, that doesn't mean it wasn't getting historic flows into Bitcoin. I think that's something that I don't have the numbers in front of me, but it was a massive year for Bitcoin anyway, even though it didn't have its usual triple digit appreciation. And I think gold can explain part of that just because gold did so unbelievably well. You probably had a lot of people last year buying gold for the first time in their lives because you have people that have held gold for decades. They call themselves gold bugs. They're buying gold more than they're buying stocks or even property or anything else. But last year, I think, was the year that gold became really, really mainstream, and you had retail investors and kids in their mom's basements buying gold because it was just the trade and there was so much momentum there. So all of this adds to the debasement trade, I would say, or it sort of hypes up the debasement trade. But ultimately, this is not going away as a theme, I would say, and it's also not new as a theme. It's been around for a lot of years, but we've only sort of started to pay attention as a broader public.
Yeah, it's pretty astounding to see an asset add $10 trillion to its market cap in a calendar year, right? I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video. And so when we talk about Wall Street and Bitcoin, another big narrative of 2025, of course, was these treasury companies. And we saw the proliferation, over 200 of these DATs, digital asset treasury companies, come onto the scene. And they were supposed to be this new vehicle that allowed you to get Bitcoin exposure that was amplified Bitcoin, multiplied Bitcoin. But a lot of these are down over 90%. With your time looking at markets, did this look like a mania to you? Is this something that's just a flash in the pan, or do these stocks actually have a chance of coming back to life?
I think like any theme or any new exciting trade in the market, there's going to be winners and losers. And I think the one I paid attention to most, which is probably what most people watched most, was MicroStrategy. I think that was a fascinating story, and the chart is crazy. I mean, it went up just so high and then went down so low. I don't know if they're out for the count. I wouldn't, with a Bitcoin treasury that size, they're so many light years ahead of every other company. I wouldn't necessarily count them out. I would say, I think, market sentiment shifts very easily. I think they're going to be fine. Like, I can't see how, if you have that much valuable assets on your balance sheet, can the stock price and market cap stay depressed for that much longer? Who knows? Because I could very easily see a scenario where Bitcoin goes back to 110, 120 this year, and MicroStrategy goes with it. Like, I think that's not a outlandish prediction to make. So that's one that will probably determine the temperature for the rest of the trade. I think these Bitcoin treasury companies or digital asset companies. Other than that, I don't watch it too closely. I would say we're not at the point where I would call it necessarily a bubble. I think we still have to let quite a few things play out. And frankly, with this administration, anything is possible. Like, you never know what regulation might evaporate the next day. And suddenly some of these companies or stocks can just rip higher because one tweet from Trump changes the whole landscape, right? Like, we just saw this week. He tweeted something about capping the pay of executives in defense companies until their contracts were paid up, or if they were delayed contracts with the government until those were resolved. And that sent all these stocks, like the defense contractor stocks, all of them fell dramatically, like between 3 to 7%. But then within hours, this is unbelievable, he tweeted again on Truth Social, and he said, we're going to raise our defense budget in 2027. I think it was by like 50% or something to 1.5 trillion. And all the defense stocks that he wiped out billions of market cap in, they suddenly all came back. And that was in a matter of hours. And there was really no material policy changes that had been implemented in those hours. And yet, because he puts these comments into the world and the market reacts so quickly to them, you could almost say the whole industry was changing on a dime multiple times before any policy actually happened. So I don't know why that couldn't happen for the Bitcoin related stocks or crypto related stocks. I think that's very much in play. It's Trump's whole playbook is being unpredictable. And I think investors are still learning how to react to that. But these big swings in the market, they could very easily be 10, 20% swings in companies that had been so beaten down for months. So I wouldn't count out a rebound at this point.
Well, I mean, he's playing the Bitcoin treasury company play too, right? DJT, his media company, has over $2 billion worth of Bitcoin. His son, Eric Trump, runs a Bitcoin miner with over 5,000 Bitcoin on their balance sheet. So he cares, right? He's definitely keeping track of how Bitcoin is doing. And let's go into that in terms of Trump and the economy since he's taken back over last year. I mean, he's made a lot of proclamations. There's been executive orders. Some of it seems just like throwing stuff against the wall, like a 50-year mortgage, seeing what sticks, seeing what the public reaction is. But they also seem to be able to pivot quickly and realize when the public isn't too happy about something and go in a different direction. After 1 year now of Trump being in round two, what would you say has been his effect on the economy so far?
I mean, look, I think the economic growth has sort of speaks for itself, right? We had a record-smashing GDP last quarter. Asset prices have certainly done well. I think Trump is almost his policies or his, let's say, administration so far. They're doing a lot of great things for the overall economy, and I think growth is strong. I think inflation's been coming down. A lot of things are improving on paper, but I think it's going to take more than one administration to sort of unshake the feeling that things are not good. So generally you have sentiment surveys are in the dumps, and they've been in the dumps for kind of a couple years now. It was like that in the previous administration, it's like that in this administration, but things on paper and the economic data have meaningfully improved under Trump. That has not resulted in a meaningful improvement in sentiment. And if you go out on the street in New York City and you ask people what they think of the economy, a lot of people are going to say that they're scraping by. I think that's very true. That was true a year ago, 2 years ago, 3 years ago, and that's probably going to be true a year from now, 2 years from now. Nothing from the top-down governance is going to change that anytime soon, I don't think. So we have this, the term everyone uses, K-shaped economy. You have the rich getting richer, and then the middle class and below, everyone feels like they're getting squeezed. And I think no matter what Trump does, gas prices have come down, inflation has come down from historic highs, GDP is unbelievable, technology is accelerating faster than ever before with AI, and you have these deals being signed with NVIDIA and Oracle, OpenAI, and it seems like there's a ton of activity in the economy and business is booming, but at the same time, that doesn't necessarily trickle down to everyday consumers just yet. And I don't know, who knows if that can happen. I'm not really sure. But on both an anecdotal basis on the people I speak with, and then also on the surveys I study from the Fed, the government surveys, and take them with a grain of salt because there could be misgivings in some of the data. But I still pay attention to them. I don't know what has to happen to bring that K-shaped economy together. So I think two things can be true at once. The economy is accelerating and getting more productive. Technology is having a bigger and bigger role in the economy. Business is booming. Asset prices are booming. But at the same time, it doesn't necessarily mean things are better for the everyday American. So I don't know. There's a lot of granular data you can get into, like, like crime rates are down, I believe, in many cases. So you could say that is something that shows, look, life is getting better. Maybe. I'm not really sure. But on an affordability level, I think it's so difficult to say with confidence things are better than they were, however long ago, because I think they would come off so tone deaf to so many people. I just had an interview with Mike Green of Simplify, and he had a super viral essay a couple months ago where he essentially did the math and said the new poverty line in America is $140,000 a year. And that is not even in the same universe as the government recognized poverty line of $32,000 a year. And when Mike published this essay, the reason it went so viral is because you had so many people in ivory towers, so many economists that attacked that number. And they said, Mike, you're tone deaf. Mike, these numbers don't add up. This is bullshit, whatever. But you had so many young people, especially, and middle-class people you see it on Reddit, on Twitter, they praised this essay. And they said, wow, I finally am reading something that mirrors my lived experience. And lived experience is sort of a woke term these days, but I think Mike really hits it on the head with laying out healthcare and transportation and childcare. And something he really highlights, it's like our parents and grandparents, they could not imagine seeing their childcare bill the biggest number on their balance sheet every single month. That is unfathomable to boomers. But the fact is, younger millennials and Gen Z, that is the reality that we're facing. And that I think is a huge issue of the affordability crisis. Housing costs obviously are the biggest thing right now. No one can afford a home. The average age of a first-time home buyer, I think, is 40, which has never been the case in history. So, and I've talked to older Americans about this too. They say, look, every generation has its challenges, which I agree with. That's very true. But I do think the affordability issues today are nothing like we've seen before. And frankly, I don't know what President Trump can do about that as president. I think there's a lot of ground up issues that we have to resolve first. And, all this is to say the K-shaped economy, I don't see that resolving anytime soon. I don't see affordability really easing up that much for, frankly, the majority of Americans. And all that is fair to say, even as I think the economic data improves, productivity improves, AI unleashes amazing things for society and the world. It's complex. I'll stop there.
You're right, it is complex, but also rather simple when you just flip it around and say it's a story about purchasing power. Our purchasing power is getting eaten away, and it has been for decades. And that is why the youth is so up in arms, and those who already were able to get their houses, get their assets, have a stock portfolio, they don't see a problem with it, right? And that's the great generational divide that we're seeing here, is that those who haven't gotten on the asset ladder are feeling left behind, and they don't know if they can ever get on it because their paycheck needs to be spent in whole on childcare, on rent, on food. The prices of everyday things are going up so much. I mean, you live in New York City, like you can't get a Taylor ham, egg, and cheese for less than $10, right? Like that should be a $3 meal, but no, it's a $10 meal. So that's what we're facing here is this crazy amount of purchasing power erosion. But the funny thing is, we should be seeing that go up because we're having this great technological boom. AI should be improving productivity, and that means that everything should be getting cheaper. We should be living in a world of abundance. But at the same time, that has to be counteracted with more inflation. This is the great Jeff Booth thesis, of course, that this whole entire system is based on on inflation, numbers going up, and they cannot see the stock market go down. It's a matter of national security that if the stock market goes down, then the boomers' retirements are in jeopardy, and this whole entire house of cards collapses. So I think that's what they're trying to do with like these 50-year mortgages, bringing the Fed funds rate down to 1%. everything is just an attempt to keep this can kicking down the road, right? Keep this Ponzi alive. So that's the hard position that they're in. Could they improve the situation for the youth? Yeah, but it would mean housing prices collapsing, right? So what do they do here?
I honestly, there are much more brilliant people than me trying to solve that problem of what do we do for the affordability crisis. And I think one issue that it's difficult to become an asset owner, I think, for young people because, the Adam Kobese with the Kobese letter, he always says, own assets or get left behind, which I think is true. But if you're a 22-year-old, you're coming out of college, you can't get a job because entry-level jobs are being automated away. You can't afford a home because you don't have a job. And you're living at your parents' place, and maybe you're scraping by on a job that you're overqualified for. How do you get from that to owning assets? I'm a big believer in hard work and bootstrapping, but I think there's also like levels to this, right? So if you say, okay, I'm going to pay for my own apartment, going to get my own car, pay for my own health insurance as a single person. Let's say you're a single guy living in a metropolitan area. After all of that, you don't really have that much discretionary spending to put into, let's say, Bitcoin. If you want to buy Bitcoin on a recurring purchase every single month, you don't have that much left over at the end of every month after a couple paychecks, and you're buying groceries and rent and health insurance, all these things. So that's an issue that I don't know how that resolves. And I know that boomers would hear that and say, that's what every generation has had to deal with. They would say, look, when I moved out, I also had to buy everything myself and figure out how to invest, how to own assets. And I've done very well for myself. And I think there's just this generational gap in understanding how much things cost today versus back then. And, it's very possible that our grandparents said the same thing to their grandparents. I don't know. I wasn't there. But it does seem to me that, and we can go back to the $140,000 poverty line idea. The reason that there's such a generational pushback on that one number is because they cannot, older folks, I think, cannot comprehend life costing that much at this age for young people. And, you could say this is a policy issue. You could say it's a budgeting issue. I've seen people say like, oh, you're just not disciplined enough with how you spend your money. I think that's not a fair criticism because that's essentially saying like each individual's moral behavior is not up to snuff, rather than saying like, okay, something more broadly isn't right. Because if so many people have the same issue, is it possible that everyone's sort of moral or discipline and backbone is the same, is off by the same degree? Or is it like the system that they're trying to operate in? So, these are big open-ended questions that I don't really know if I've seen that promising of answers or solutions to. But this is, eventually, if we trace it all back to Bitcoin is probably the best possible asset for asymmetrical returns still, even though the asymmetrical returns will probably decrease every year moving forward because it's becoming more and more mainstream. But even so, I think it'll do better than equities or any other asset class.
Thank you. Yeah, you stole the words out of my mouth that the hope for this generation is Bitcoin, right? You got to take whatever excess cash you have and turn it into a hard asset and have patience, right? Lower your time preference and be willing to swallow the lumps and put the effort into seeing that number grow up. The number of sats you have in your cold storage should be growing, as you said, on a monthly, yearly basis. And I think that what we've seen in 2026 so far is that the system is sort of getting more desperate in order to try to solve this issue that we're talking about right here. We have runaway debt, right? We just surpassed $39.5 trillion national debt. We're going to hit $40 trillion by August right? We're adding roughly $1 trillion to the national debt every 100 days or so. And we're, that's just an eye-popping number. But so was our latest excursion into Latin America, right? We just extracted a sitting president from his country, and now we say we're going to take over the oil resources. And I mean, that's one way to keep inflation down, right? Is to get cheap energy. Energy is the foundation of everything, so that's able to keep prices down. And then we're also seeing these sort of drastic moves when it comes to stable coins, right? The Genius Act was passed last year. And so they're going to try to have these private companies replace sovereign nations for buying US debt. So you've got stable coins buying the debt, you've got inflation, hopefully having a cap by adding more oil. But yeah, you recently wrote about the Latin America situation, investing in Latin America, now that this is just all popped up on our radar in the last week. Give us your rundown on that.
Yeah, I think the Venezuela situation is super interesting. I think the spillover effects of a stabilized Venezuela for the rest of Latin America, that could be extremely interesting as an investor. I'm not going to get into the politics or the geopolitics of it, but I do think that if you look at Brazil and Colombia and Peru and some of these other countries, their markets already are coming off an exceptional year. The ETF I'm watching is the ticker ILF. It's the iShares Latin America 40 ETF, and that does not include Venezuela in it. But that ETF did 45% last year. It's almost triple the S&P 500, and that was before we had sort of a U.S. backed Venezuela operation happening. So if we get Venezuela that is suddenly backed by a capitalist society rather than a socialist dictator, imagine the spillover that could go to these other markets and how optimistic investors would be on the region as a whole. So what we've also seen in the last year, which is why I think markets did so well in 2025 in Latin America, you had a gradual shift to the right. And you also, I think that starts with Trump, but you also had other elections happening in the region that were shifting to the right. And you also had expectations for 2026 for more elections that were going to lean to the right as well. So we have three major elections coming up in this year in Latin America. And those are, kind of right now, they're a toss up on whether they go right or left. But if they fall right, I think markets do extremely well. So I'm going to be watching this ILF ticker all year. And if we get this sort of right-wing sweep, forget about the politics for a second. They are more market-friendly governments. And if we have a non-socialist Venezuela on top of that, I think the bull case for Latin America could be very, very strong. And there's a lot of uncertainty as to whether we get to that. I think a lot of dominoes have to fall into place. But I do think that Latin America is one of the most interesting plays to pay attention to this year as far as the equity market. And look, energy is also an interesting idea here. I think the oil companies, U.S. oil companies, could be a pretty interesting play as well as an investor. If Venezuela, if we come to some agreement in Venezuela where U.S. oil giants come in and do extremely well in the country, those stocks will probably do pretty well in America. It's possible that the operation in Venezuela is limited to only giving U.S. oil giants concessions, and then the broader economy doesn't stabilize or doesn't become more democratic and so forth. In that scenario, U.S. oil giants still win. So I think they win no matter what. But then we can also see sort of a like a halfway democracy in Venezuela where it's like US backed, but it's mostly focused on, let's say, financials, reopening credit lines, restabilizing some of the banks in Venezuela. And in that scenario, ILF, I think, will do well because there's a lot of financials in that Latin America ETF that would benefit from a more stable financial situation in Venezuela. And then the sort of the option three here, if we have a full US restructuring in Venezuela, and then that starts to reach into business and agriculture and materials and energy and finance. These are all the sectors that are heavily weighted in ILF. So that could be a huge bull case for this, the ETF, but the ETF is really just a proxy for Latin America as a whole. So Latin America could do very well in the situation where the US comes in and really commits to, okay, let's get Venezuela out of its sort of socialist stupor here and inject it with this capitalist livelihood. So I think there's a lot of interesting outcomes. I'm certainly paying attention to Latin America more than I thought I would be this year. But here we are.
Here we are, 2026. And I need to ask you about AI. You talk to all these bigwigs on Wall Street, and of course, this has been the narrative of the last year, last 2-3 years, and now it really seems to have hit an inflection point, right? And the question I often hear you ask is it a bubble? And the answer you often get is no. But yet still, a large part of the world thinks it is a bubble. So if you could just give a quick rundown why AI is not a bubble, tell us.
Yeah, I'm personally in that camp. I don't think it's a bubble. It's possible that asset prices become a little overextended, but that doesn't mean that the technology or the infrastructure is full of air. So I think those are two separate things. I think that the demand for energy is going to be extraordinary. The demand for the infrastructure and the products of AI is going to be extraordinary. And we've never been in a bubble where we hear the companies that are driving the bubble say that they cannot keep up with demand. So I think the combination of all that gives me sort of some peace of mind that, look, we're not in another .com or another tulip mania or something like that. And also, the people I speak with are seeing real, sort of real life use and integration of AI. I think business contracts with AI companies is going up every single quarter. You have companies in the S&P 500 mentioning AI more than ever on their earnings calls, and they're also posting jobs related to AI more than ever. So I think if it was all talk, then it's like, okay, let's start asking some more questions. But because we're seeing these meaningful, I would say like harder to reverse things, like huge investment, new jobs coming up, specifically in AI or AI engineering or machine learning. And then also, obviously, the infrastructure plans are so astronomical. There are very smart people making these decisions. Like the Elon Musks of the world are deciding that this is the direction things are going in, and it's worth the multi-year, sometimes like decade-long investment in this technology. So I guess the assumption that I'm working with is that the people making these decisions, who are betting their livelihoods and companies and reputations on it, they have done their homework. And maybe, you could say you could have made that same assumption during the dot-com bubble. Yeah, maybe. I wasn't covering markets at the time. I don't know it as intimately as this current wave. But I would say everything that I have read and all the people I've talked to, I've talked to people at JP Morgan and Goldman Sachs, all the way to boutique investment shops and fund managers. And then I've talked to people that have been on the factory floors in Taiwan looking at these companies building the chips. So across the board, everyone is very optimistic and telling me, look, not only is it not a bubble, we may not even be able to meet the demand to this boom. So I think all of that combined, it's very hard to bet against. I know Michael Burry, the big short investor, he's come out very bearish against all of this. I think, he's published work against NVIDIA and even Tesla and some other AI names. And look, he's a smart guy too. He obviously made a lot of money in the big short. Who knows? I think I'm certainly not going to be putting my cash on the sidelines to wait for something to pop. I think there's a lot of money to lose in that scenario as opposed to just sort of riding it up. I haven't met too many investors who I respect that are saying, pull your capital out because this house of cards is coming down.
Yeah, and if you look at some of the hard facts, it really is a different situation than other quote unquote boom bubbles that we've had in the past, right? So, I mean, for everything to be electrified, you had to build out the grid, right? For there to be a internet, you had to build out the network. The dot-com boom was them all lying fiber optic cable before there was a whole entire e-commerce economy or anything built on top of it, right? That's why it was really a bubble. Now we have the internet, it's everywhere, and you can just download AI, right? So there's no network that needs to be infrastructure that needs to be built for that, right? We can already get the benefits live right now, and it iterates, it changes, it gets better on a monthly basis, right? So we're able to get the economic benefits in real time, and I think that completely changes the equation because these companies are making money now, right? Like Anthropic just raised $10 billion at a $350 billion valuation because they look to be earning $20 billion this year, right? And that's mostly coming from enterprise, not even the consumer route that OpenAI is going down. So there is money hitting the bank accounts, and I think that really changes this from just a bubble.
Totally. I think the bears in this scenario, it's I understand where they're coming from. I think a lot of it is a fundamental bearish position on life. The bears that are bearish on AI, they've also been bearish on every other trend of the last couple decades. So I don't know if they'll necessarily be able to change that view or change that position. But to me, it's I still see more reasons for optimism than otherwise.
So I want to get into you and your story right now. You branched off from corporate journalism and started your own thing. And I think that we're going to be seeing a lot more entrepreneurship in the next decades ahead because we're sort of forced to, right? So let's talk about your journey branching off onto your own, and what advice you would have for young people who want to start their own companies.
Yeah, I think the interesting thing about living in today's technological environment is that the barrier to entry to building products has never been lower. And if we even just talk about media specifically, anyone can start a podcast, anyone can start a newsletter, start a blog, start a YouTube channel, start a TikTok channel, and all of those things, if you are diligent and consistent enough with them, you can monetize them. And I think that is sort of that's something that you can get escape velocity from, to leave a job that you don't like, or maybe to secure that extra income every month so that you can invest or own assets. So I think entrepreneurship is this unbelievable tool that has it's become more accessible than ever in today's environment. You still need, I think, the self-belief and the courage to take a jump and bet on yourself. But I do think that with the tools we have that are increasingly, pretty much everything's free too. There's never been a better time to be wanting to build your own thing. And so something I did when I was at Business Insider, I maintained my own blog. So I've been writing my blog since I was, I think like 20 or something, or 21 maybe. And I'm 29 now. So I've been writing my blog for 9 years, and that's separate from the journalism I produce, separate from my Opening Bell newsletter. I just write on this blog, and I've been building that audience for almost a decade now, right? And that's the thing. That blog is what got me into graduate school. It's what got me into Business Insider. And I think it's what also gave me the confidence to go out on my own and start a company. So all of that is to say that if you're a student or if you're working a job you don't like, you should be having experiments on the side and projects that you're running on your own, because those are going to be the things that open doors for you more than your actual day job. I'm a big believer in this. I think if you focus your time on the things you're genuinely interested in, those are going to be the things that you can compete in. So for me, I was like, I really want to be a writer, and I want to be the best writer I can be. Didn't know at the time it meant being a journalist or being a reporter, but I figured I love doing this so much. I will do it more than everyone else, so I have a shot at being better than everyone else at this one skill. And that's what I essentially took a bet on, and that's how my career has gone. But I could very much have seen myself doing, okay, maybe it's, I wanted to be the best TikTok video maker about specific stock picks. If I did that for 10 years, my guess is I'd be pretty good at it. And I think the people that are starting today they're 17, 18 years old. Anyone has that potential in front of them as long as they're diligent and consistent enough in doing that, whatever that thing is. And the caution here, I would say, don't pick the thing you think would be popular. Just pick the thing that doesn't feel like you're working. That's the best guidance that I could come up with. Because if you try to reverse engineer what you think will work, it's probably not going to work. You have to start from the ground up and say, look, this is what I love to do, and I could see myself loving this for years to come. So I'm not just going to stop or give up because I get bored, disinterested, or get a different hobby. That's when you get into sort of a tricky zone. It's like, well, if I'm doing something because I think it's going to be successful, but I don't really like it, what if I get 5 years in and I just start hating it? But now I'm already, I feel locked into this one path. So that's sort of, I think the opportunity is there for anyone that wants to take it and wants to commit to it. But I would say the trick is find the thing that you really, really give a shit about, is how to say it.
Yeah, find what's fun. And I think the key word you said there is consistency, right? The only thing you can control are the inputs, the amount of energy and time that you put into it. How the audience receives it is up to the universe. But it's up to you if you sit down every single day and plug away and iterate and get better, right? You just got to be consistent, and eventually, you tend to get better. People tend to get better at things they do a lot. So if you can turn that side project into something you do regularly and share it with the world, right? You had a blog that was open on the internet that everybody could see, and that was your portfolio that far exceeded any credentials you could have had to get you where you are today.
Totally. It's it's really quite magical when you think about it. It's like anyone can use their phone even, or if you have a computer, and start putting your ideas on the internet.
Yeah.
And the good ones will rise to the top. And there's going to be a lot of bad ideas you publish too. I publish a ton of bad ideas still to this day. I've been at it for a long time. But the good ones are the things that carry you and sort of put your name on the map.
And in terms of AI in your business, what's your stack? What do you use on a daily basis?
Yeah, I mostly use ChatGPT and Gemini. I use both depending on the situation. But actually, in the first maybe like 7 months of 2025, I was using ChatGPT mostly. But then in the last quarter of the year, I probably went like 80% Gemini. So something happened when Gemini updated its models, and suddenly it just became way, way better for images, for writing, for text, for research, stock research, all this stuff. So that's really what I do. And something that I think is most helpful for me, I generate a lot of like graphic art for my newsletter and for my news articles. All that's AI generated art. And what's interesting is that I can do all that for, whatever the membership is. I think it's $20 a month for one of these AI tools. Most newsrooms in corporate media pay thousands of dollars a month for a membership to Getty Images or some other professional stock photo thing for journalism. And, the images are obviously like they're real photos, they're not AI generated, but the cost is, it could be 100 to 500x the cost that I'm paying as a sort of digital native news shop. And I think that's really interesting. I always think about the newsrooms I have friends at and have worked in. They have teams of people in the art and graphics department. And I don't know how much longer that will stay viable in the media business because, one, those are resources that could be allocated elsewhere. But two, we have tools that can do them for 1% the cost. And, that might sound like a cold and calculating way to talk about it, because obviously these are talented people and real people with livelihoods and jobs. But at the same time, I think that trend is going to seep into every other corner of not only media, but every industry that we can think of that used to rely on sort of manpower, frankly, and all the cost of producing these goods and services is going to come down so dramatically because these AI tools. I think it's that goes back to entrepreneurship. It's a very exciting time to be an entrepreneur because you no longer need to hire 10, 15, 20 people in your operation, you can do it much leaner than that. So that's pretty exciting. And I'm certainly a big proponent of using AI tools and getting as in the weeds as possible with the new technology, just to be able to speak the language, essentially.
100%. You got to be experimenting. This is the 2026, the year of the great lock-in. There's vibe coding, there's image generation, all the research you could ever want at your fingertips. If you're not experimenting with it already, you're getting left behind. So you start your own business, use AI to build it by yourself on the cheap, and then you take the profits, turn them into Bitcoin, and you're going to be set for the 21st century. Phil, thank you so much for taking the time to join us today. If people want to check out the newsletter, your podcast, where should they go?
Yeah, Rob, I really appreciate you having me on. My newsletter is called Opening Bell Daily. It's a free newsletter, comes out 5 days a week. And we also have our Best Ideas Club, which is a stock pick every Sunday. That's our paid membership. And then my podcast is called Full Signal. And that comes out multiple episodes a week. And all of this stuff I post on X or LinkedIn, just Phil Rosen. You can find me pretty easily. And I'm excited to get this year started and do a lot of great work, as I know, Rob, your team will be doing as well.
Cheers, Phil. All right, here's to a productive and fruitful 2026, my friend.
Absolutely.
Bye-bye.
Thank you.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.